The theme of this year's report is simple but transformative, where lower rates and rising supply converge, opportunity reappears. And we talked about that a little bit on the market reports, where I think we're going to see some opportunities to buy this year, not only as a homeowner, but also as an investor. The rates have come down pretty significantly. Fed's probably going to cut rates, I think, once or twice more, at least this year. So that's kind of the thesis, is that we're going to see lower rates, but also inventory is kind of increasing. So we're going to see a lot more balance than we have over the past, I don't even know how many years. It's kind of been crazy, but I think it's going to be a more balanced market. And that's exactly what they're saying here. So lower mortgage rates will open the door for millions more to buy in 2026, but only in markets where inventory aligns better with what local markets can afford. So we're going to see that here. Not only is that for homeowners, but also for investors as well. We're going to start to see those numbers make a little bit more sense in terms of cash flow should improve a little bit this year, I believe. But the main reason I wanted to highlight this report was it talks about the top 10 housing spots for 2026, and it says what we already know, that Indianapolis is awesome. And among that top 10, it doesn't list it like 1 through 10, so it's just alphabetically. But I mean, here it is again. I think Zillow, we were number 1 or number 2. We got National Association of Realtors saying we're in the top 10. So I mean, just more good news for Indianapolis. We already know it. We believe it. Indianapolis is a great place. It's a great place to invest. It's a great place to live. But here we go. NAR is agreeing with us here as well. This is a local look at the sales data. This is from MIBOR, our local association of realtors here. And I don't want to go into these numbers in detail. We do a deep dive into actually each submarket. So I think it actually provides a little bit more context. So if you want more context, take a look at our market reports, and it will actually go into Indianapolis, Fishers, Noblesville, all of those areas on individual basis, and look at actually all these numbers. So, but what I did want to focus here on was, do you remember, Chris, when we looked at this maybe like, I don't know, what was it, 9 months ago? And I really, to get an idea of the health of the market, I like to look at this months of inventory, or the absorption rate. So if you stop selling houses, how long does it take to go through your inventory at the current rate that you're selling houses? And when we looked at this, I don't even know how long ago it was, 6-9 months ago, maybe a year ago, I have no idea. You were kind of making the argument, hey, that the market's falling apart. And I was like, no. And I pointed to this. And if you remember, it was in the ones. It was like 1.8. And so here we are at 3.3, which is a significant increase from what we saw 6-9 months ago. But that is still kind of a balanced market, as I've been saying here, is that we are in a balanced market. But no doubt, this number is going in the buyer's direction. So the higher this gets, the more it's a buyer's market, right? When it's in the ones, it's definitely a seller's market. So we're at 3.3. We're balanced. That's why we're seeing these days on the market as 50. That seems high for what we've seen over the past couple of years, but I'm telling you, I've been in real estate for 25 years. That's normal. That's average. So anyway, but that's what's going to contribute to some of these prices softening a little bit. You're not going to get into bidding wars with multiple offers, that kind of stuff. Although that does still happen. But anyway, that's what I wanted to highlight here, was the month's inventory, or the absorption rate for the local Indianapolis market, currently sitting at 3.3.
Yeah, I mean, there's again, like we were talking about earlier in the podcast, there's no investor report that I've read out there that doesn't include Indianapolis as a top market to be a part of. So there's a lot of investor activity. So yes, those bidding wars do still happen typically when there's like a super good deal opportunity that might come across. But just as the market in a whole, exactly. The inventory is continuing to tick up. I've said this for the last 2 months in a row. Buyer's market, much more negotiating power is here, and I think is going to continue to come here over the next couple months, really until the Fed lowers their interest rate a couple more basis points, and that mortgage rate continues to come probably into the mid fives. I do believe that's probably where buyer activity picks up a little bit, and maybe there'll be some more stability maybe around that. Until then, I really do think inventory is going to continue to tick up, and it's going to continue to be a buyer's market.
I agree. We're going to see some more opportunities for sure.
And to make sure that our viewers had a clear understanding of what the absorption rate is. So just going back to that for just a second, it's very easy to understand. It is, if we didn't had one new listing starting today to the market, it would take us roughly 3.3 months to burn through all of the inventory that's currently on the market as of today. So like Mike has educated me and a lot of our viewers, that 3 months indicates a really healthy market. And also, if you look back at the beginning of this economic report, we were talking about how quickly we kind of expanded from a 1.5 months worth of inventory. Now we're at a 3.3 and continuing to tick up. So again, these are major numbers to continue to keep an eye on to see how it's going to affect affordability, mortgage rates, and all the above.
From IBJ, this is just Central Indiana existing home market closes 2025 with a strong December. So kind of what we saw, really, we just reported this in our market reports that almost every single market in the area that we report on 10 of them. I think almost every single one is seeing an increase in the average sales price. And so January, we definitely saw a decrease in the number of homes sold because of the weather that half of the nation experienced. So probably not going to see those numbers in January, but this is just a little positive boost for Indianapolis that even in December, the existing home market is still strong. So nothing really to point out here other than, again, just that headline that the sales were up almost 2% in 2025. So with all this doom and gloom out there, Indy's actually still doing pretty good. So the other one, also from IBJ here, but we talk about this all the time, but it's hard not to because there's so much headlines and news about this, but that Meta actually began construction on its $10 billion data center at the Leap district in Lebanon. So we do a market report on Lebanon. We're seeing rents go up. I forget what the number was, but it was a lot, to 20 or 30% year over year in Lebanon. So there's lots of growth here. And so what I wanted to highlight was that this is actually coming to fruition. So there's been a lot of talk of like, hey, it's coming. They've made some commitments, but like not a lot has happened. Well, Facebook has actually started on this $10 billion data center. And there's a lot of talk about data centers. A lot of, some people don't like them, but I think some of that is a little bit of misinformation. But what I'm looking at is jobs, right? So the company said that once fully operational, they will employ 300 people. Now, that's not a ton, but during the construction, there's going to be 4,000 construction workers in the area. So great for a short-term rental, great for short-term demand. Plus, we've got 300 long-term jobs here. In addition to this, and this is probably the bigger news for the Leap district, but Lilly is also dumping a ton of money in here. So this goes on to talk about the water impacts, but it sounds like Meta is really trying to be a really good participant in the community. They're basically going to give back. They're going to pay for everything that they use, plus they're going to donate money to update the infrastructure and all that kind of stuff. So I don't think it's going to have that huge negative impact that we have heard of. But the other thing I wanted to talk about was the Lilly has signed multiple development deals together totaling $13 billion. So on top of this $10 billion that Meta's putting in there, Lilly's putting in $13 billion. It's going to span 800 acres, and this is the important part for me, more than 1,300 high-wage jobs by 2030. And that is right around the corner, 2030, to have 1,300 highly paid Lilly people in that area. So that alone is going to have a huge impact. So that's why we keep talking about it, because there's so much activity. And then there's going to be more and more activity, because when you start to see activity like this, more and more businesses come in. So anyway, I feel like about Lebanon, I talk about Lebanon all the time on these, but there's just so much there, and it's a new market. You know what I mean? Not a lot of people have paid attention to it. So it's exciting to see. This is just a quick mention, but we talked about this a lot last year in 2025, but Fishers and Carmel really took the lead, and I think we're the first municipalities in the nation to just straight up have a ban on rentals over 10%. And so it was a little bit controversial, and so we're starting to see some pushback from lawmakers. So this is just kind of talk right now, so I don't want to really get too much into it, but just know that there is some pushback, potentially some lawsuits, and potentially at the state level trying to take control of that. We'll have to keep an eye on this, but if you recall, I had the opportunity to meet with the Noblesville mayor in a small, and I asked him, hey, is Noblesville and Westfield, are they follow suit here? Because I thought it might kind of catch like wildfire, and he said, no. He said, let Fishers and Carmel take the heat on that, take the lawsuits, basically absorb the cost of trying to defend it, and then we'll see what happens. So this is just something to keep an eye on. If the lawmakers do come in and try to step on Carmel and Fishers, and exactly what happens. So anyway, just wanted to mention it because it is affecting people interested in Carmel right now. You don't have a rental there right now. The odds are that you probably cannot have one or cannot buy a new one with the rental cap being in place.
That's right. Yeah. So keywords here. So this is referring to the rental cap that was instated in the Fishers and Carmel markets, and how at a state level they're trying to put the kibosh on it. So as it indicates there, language buried in a bill about local finances would override those ordinances and prevent local governments from restricting real estate investments or new landlords coming to the market. So yeah, like Mike said, this is just early discussion at this point, but this will be interesting to see how it unfolds.
Absolutely.